Good evening, everyone. It's Jeremy King from Trading Safely. Thanks once again for joining us on our weekly Masterminds webinar. We've got Shaun Downey with me from the UK, 2014 Technical Analysis Book of the Year. Well known in his space. Excited to have him on once again. Hope everyone's doing well from around the world. But just let me know if you can hear me at the moment. Shaun, g'day. How you doing?
Yep, pretty good. See what this week's got to offer.
Yeah. Let's see what this week's got. I mean, last week, so, when we think about it, we were talking about, that we had the Dow still going up, took out upper pivots last week, and the Dow Jones continued on its merry way. But I guess before we get into the markets, what are we going to do tonight? We're going to spend about half an hour to 45 minutes just covering off on some of the stocks that we put out through the week. We want to cover off on where the markets are going this week. We're going to have a look at what our software is telling us. For anyone new that's on tonight, welcome. At times it can be a little overwhelming if you're here for the first time, but what I would say is that our system is designed to cater for both beginners and high-end users that are very experienced and have been trading for a long time. So please be patient if you are new. What is it that we do? Well, Shaun and I have software, and we effectively mentor people. So people that are on our subscription list, we effectively train them a couple of ways, through one-on-one Skype sessions and also through our online Facebook community. So if I just sort of pull that up now, I'm just going to share screens, everyone, so bear with me. Here's our online community site where we put up lots of great information. We're punching out videos all the time. We do morning updates. We're trying to focus on the Dow and gold, euro, the dollar index at the moment, just to get people into the swing of how we analyse markets. There's a wealth of information that's coming out on a regular basis. Shaun's over in the UK, so he can cover the American time frame and the UK time frame, and I'm over in Australia, so I've got the Asian session covered. So tonight we're going to cover off on some of the stocks we looked at last week, and then we're going to have a look through global markets to update everyone on where everything's at. And I guess finally, we are excited to offer another opportunity for people to take up a 30-day free trial if you're interested. So we'll put that opportunity up in a little bit. But, first things first, this webinar is for you if you do actually want to commit to change your financial future, or you're sick and tired of trading indicators that don't work. If you're interested in getting expert opinion on global markets, you come to the right place. And we think that you're going to get an unfair advantage over most other investors because of the information and the years that we've spent investing in this intellectual property. Shaun's been in the markets for over 37 years. I've been in it for 15. Together we've pushed the boundaries somewhat from where things started, and we're pretty excited. So this is a forum for you to ask questions. Perhaps we should probably focus on that a little bit more. Don't be shy. Put your hand up if you want to ask a question. You're certainly going to see cutting edge trading technology in action. That's what our trading software does. It is cutting edge. And, look, if you're an already experienced trader and you're wanting to take control, or you want to, hone your skills a bit, you've come to the right place. And finally, if you want to become one of our online community and get 24-hour round-the-clock updates on global markets, just so you can position yourself and have a feel, effectively have your finger on the button around the world, this is the place to be. So once again, welcome for joining us. I touched on Shaun's background. Shaun, do you want to quickly run through your background for our listeners?
Trading since 1979, 16. Traded all asset classes, multiple time frames. Worked in Treasury, so I worked in Australia for a couple of years, head of Treasury and trading for a company that owns Speedo Swimwear and Foster's Beer. in the 80s, run various private funds over the years as well, investing, done futures, foreign exchange. The last few years been doing individual stocks, written commentaries, wrote books, mentored the professional market for 20 plus years. So been around the block, as it were. So sort of semi-retired now, help my wife and daughter with their doggy daycare business, and look after our clients in the UK and American time zone. So that's where I'm at.
That's quite a record you got there, Shaun. And myself, I've been in the game for 15 years. Began in energy markets and still have a deep love for them. They are one of the wildest markets in the world. And what's going on in Australia at the moment is probably a good illustration of that. But prior to that, I worked at Optiv Australia as a prop trader, and since then I've started. Well, I was under Shaun, and now I've worked with Shaun and alongside Shaun, and here we are to help you. And I guess if you look back on the week, Shaun, what were the main takeaways? And for everyone else, if you just please read through our information and general information. Shaun, what was the highlight of last week?
Wasn't a great deal going on. The American stock market continued to edge higher. We got our first warning sign on Thursday, so we had some divergence patterns appear, time continuation and UFO, I think. But they were just a warning. Because we're at all-time highs, the DAX did the same thing as the German market. What we really need to see is I think we'll look at some charts, but we need to see some resistance move to the top. So what I mean by that, the market's got to build resistance based on its own momentum, and it hasn't really done that yet. And it's feeling as though it might take a little bit of a time for it to do it. So we've had our first warning sign. The market didn't extend up to its weekly pivot this week, which is the first time for a while. So it lost a bit of momentum, basically. Elsewhere, the dollar pretty quiet, up a bit, down a bit. We did actually, the Australian dollar made new highs, but then reversed on Friday. Gold has gone up towards the top of its pivot as well. So gold actually outperformed this week in relationship to what the dollar did. So, and in individual stocks, home builders hit the radar. So we're going to look at them. They came up on Wednesday and Thursday, and I wrote a report on them. And a couple of other individual stocks came up as well. So feels like it needs to. There's a chance of a corrective phase, but it's got to prove itself. We recovered very late on Friday. There was a story about, I think there was a press conference from one of Trump's aides about tax cuts. And up to that point, the market was looking like it might follow through from Thursday's negatives. So it sort of saved itself right at the end.
Yep. Okay, so I guess next part of tonight, let's flick through some of the trades that appeared on the radar this week. Shaun, what were the main ones that you'd like to talk about? MKL actually looks interesting now that I've got it up. I know this came up on one of my scans. And the reason why we'd like a trade like this is because it's at final resistance. And if we look at this study below, for anyone new, what that does is it gives us information about higher time frames. And indeed, that annual line is an orange line, and so what's essentially happening is we're having a crack at last year's high. So far the market is stalled there in front of it, so we have a low risk entry point there on MKL. But Shaun, what else came up through the week?
Just another bit on MKL. We do a little bit of work on fundamentals. We don't get too involved in it, but it's an insurance company, and it's trading at a 5-year high of its own PE range, which is pretty rich. So it's an expensive stock in its own right, and it's also expensive in relationship to some of its peers. So a little bit of fundamentals telling you that it's a bit rich. The other ones that came up, VRTS came up Monday or Tuesday, I think, and
okay. Just before we go on, another one of the interesting things about MKL, for all our existing clients that have become familiar with this range relativity study, and probably gobbledygook to anyone new, but that's okay. On our site here, we do have a in-depth video here on how to use this range relativity study. But if I go back to where we were, what it's saying here is that we're at resistance and it's a sell signal. But from a range relativity basis, what we're saying now is that the weekly upper pivot is above the monthly, and the monthly upper pivot is above this quarterly pivot. So for anyone new, don't worry, but for our existing clients, that's a double overextension in time. So week over month and month over quarter. They're the sort of trades that you want to start paying attention to, especially when they line up with resistance like this. So we are interested in that. So, Shaun, what did you say? UAL?
Yeah, you can do UAL. Airlines have been on our radar screen all year. We're still waiting for crude to break up. It's still going sideways, but I monitor the airline stocks every day. And we had our first set of sell signals come in this week. So UAL, you can see that the resistance moved to the top at the beginning of the year, and airlines have just been going sideways, a little bit like the oil price. So we had some signals come in there. You also had DAL.
Before we go on, Shaun, just for the benefit of our new subscribers, when you said resistance moved to the top, to a lot of people that would probably not mean much. But Shaun, you just expand on what that means. I've highlighted the line that is the reference to it.
Yeah. So what we've got there, you can see that there's two horizontal lines that were horizontal for a considerable period of time. So they were a resistance area from way back. And then what's happened in the beginning of January is one of those lines has moved to the top of the chart. So one of the key things that we do is quantify what highs and lows are important. And sometimes it can take a long time for it to change. So whenever something's been the same point for a long time and then suddenly changes like it has here, that's significant for us. So effectively what's happened is there was some swing highs in that rally, but then the one that created the actual top, the resistance line has moved there. So we call it sort of flipping, isn't it? And that's what I said at the beginning about the actual indexes, the NASDAQ or the S&P and all those sorts of things. They've rallied very strongly, but no resistance line has moved to the top. And that's what I was alluding to. So we might get some warning signs or some shots across the bow that tell you that it's losing some momentum. But what we need to see is resistance move to the top of the trend. And that hasn't happened on the indexes yet.
So for everyone out there that doesn't understand that, when we say move to the top, that's what we mean. We mean this line that hasn't changed for a very long time then pops up and moves over price. That's what Shaun means by price moving to the top of and becoming a weight on price. So when we see that happen, now price has to get through this level. And what he's saying is these are important levels that they depend on relativity across many peaks across time. So when this line does change, and look how long it's taken. I mean, we can see back to June 2016, nothing's happened until this high. So we know now that this is a very important high, and it's a place where you like to place your bet.
Yeah, so if you do DAL, I think we'll see a similar story. Delta Airlines.
Interesting looking at the bottom study on both UAL and DAL, that we are also, look at the study below. We're at an annual level, this orange line, you know, we've failed at last year's high again. That's another sign of weakness, guys. So that's blow number one. Blow number two, here's Shaun's move to the top again. So here, the peak lines move to the top. Now these peak lines that we're talking about, they're in our trading safe. We drop down and they're these ones here, peak and peak term, okay? So this is where you'll find those lines and be able to replicate what we've done on screen, but it's the same story. So Shaun, over to you.
Yep, just again, it's been going sideways. I think the thing that's going to make airlines fall is obviously the oil price. If that breaks up, which we're still watching, that would be the point where we would probably be more aggressive in looking to short airlines. They're not necessarily that good at hedging for whatever reason. I think generally airlines, oil's about a third of their costs, but they're not always the best at hedging. So, and the market won't know whether they're hedging their oil price or not till much later, so it doesn't really matter. Next one is VRTS. This is a different sort of signal, and the reason why this sort of came up as being actionable is, instead of where you looked at the airline stocks, they're pretty close to their all-time highs, as it were. We've already made a high, yeah. So the market has broken down on its results. It broke that support point, which is that black line, and then we had a time continuum. There we go. So then we had a signal in this sideways period, and there's two things there. The first thing, the top's already been made, and we've broken a major support point in that big down day. The target, or the next support point, is a long way away, down at $66. So we're trading at 108, and from a support point of view, there's nothing there for best part of $55. So there's what we call space, lots of room for it to fall. So this is what I call divergence as a continuation pattern. Everyone thinks of divergence as being against the trend. In this instance, the trend is already down, and we've had a sell signal. So we're saying that the market can now resume its trend down. The other good thing about it is our protection line, the pink line, is back above that resistance point, so that black line. So that sort of ticks the right box as well. So we wouldn't want the price closing above that pink line, because then obviously the continuation pattern has failed. So it's very easy for us to know where we're wrong. So that was a signal.
Yeah, so what Shaun's saying there, for anyone new, this is indicating it's a sell, but we would be wrong if the day one of these candles closed above that pink line. So that level where you are wrong is well known up front before you put the trade on. Interesting though, looking at this chart, there's a couple of things that went on. I've just noticed looking at this study below. One is that the market failed at last year's midpoint, which was here. And then again, this chart, this rectangle at the bottom reflects last year's high, which corresponds with this peak here. So we failed at the previous year's midpoint, and then we failed at the previous year's high. We've broken down. We're scrambling back to try and get over this resistance level. It's a cheap out. This is a good place to place your bets, and that's why the signals come up.
Yep, the next one is an ETF, which is XHB. And this is a home builders ETF. What's interesting about it, actually the previous signals, you can see that there was some sales back in late summer last year. And then it hit its downside target in October, November. So it had space to fall. It went down all the way down. So when we broke down in September, it had its target. It got there in November. Then obviously after the election, got the confirmation of the buy signal. And you say, well, where can it go to? Well, it can go all the way back to where it started. And that's exactly what it did. And then it's failed at that resistance point on Thursday, and we've received a sell signal. Now, one of the advantages of when you're trading ETFs is we have the ability to actually look at some of the major components of the ETFs and say, well, where are these? And so I went through about 10 of them, the top 10, and just looked at how they're actually performing. All you want to have up there is just the peak long term up there, Jeremy, because try and keep it simple, because they're not necessarily all got signals. But so we have, yes, you've got it, expansion. So just take off the signals, and then it will just leave the lines there. There we go. So if you do code LEN, LEN, and what you can see there is we've got two resistance lines above, one of which, the first one, it's failed at a few days ago, and there's a bit of a zone there. So it's coming up to a major resistance area. If you do PHM for mother, and this is a very similar story. So there's actually three lines there, all very, very close together, and we stopped just shy of it. So again, that's a very powerful resistance zone that it's very close to. If you do NVR.
So for anyone new, resistance means if the market's going up and you come into resistance, it's going to be difficult to get through it. And support is the other way. If the market's falling and it comes into support, if it's strong support, it will be difficult to get through the support.
Yeah,
so
NVR, N for no. And this is an example where a little bit like some charts we showed earlier, a resistance has moved from way down and moved to the top of the trend, and it's trying to break up. It's at a pretty critical point. So it's just above it at the moment. So this is a stock that's trying to lead how home builders are higher. If you do TMHC, that's M for mother.
And just pointing out why I highlighted this long section here. This is highlight when it takes a very long line for this line to, when it takes a very long time for these lines to change. There's a very good reason for it, and the reason is that it's likely to have a very powerful impact. Because on a relative basis, you know, what it's doing is looking back over long periods of time, and it's comparing peaks at the weekly and the monthly and the quarterly level, and it's working out which ones are important. So when this line changes after, you know, what looks like close to a year or more, it could have gone on for years. You know, it's been there for a long time. So if I go back, let's actually see when it did change. Still, well, that was the first time there. So August 2014, folks, was the first time that line changed. So this is saying this is very important, this high. So
yeah, the next one is TMHC.
Oh, is that it?
TMHC.
Oh, sorry.
Now this one's already failed at resistance, so that's a classic signal, really. I mean, it went up to that resistance line the first time in December, then had another go in February and failed, and has come off. So as far as we're concerned, that one's already made its top. It's getting dragged up by some of the other ones at the moment. If you do KBH, B for brother. Once again, this keeps on stalling. It's been there. This is now the fourth time that it's come up to this resistance area. So again, keeps on failing at that point. And TOL. TOL is the strongest one in the sector. And this is what's dragging everything else up. It had its results come out earlier on in the week, gapped higher. And you can see that it's trying to break out higher. And the low on Friday was that breakout point, pretty much by the look of it. So that's one I'm monitoring to see whether it's had its results. The market sort of liked it, but it's whether it can sustain it. So lots of things that tell us there that the components of home builders have got to do a lot of work if they're going to collectively take the ETF higher. And there's just a couple of stocks that are outright bullish. The other one is MDC, M for mother. And that has broken its final resistance point, as you can see. And again, it held it on Friday. So it went down towards it, and it held it on Thursday as well. So I'm looking for the leaders, as it were, to fail. That's my ideal scenario. So if they come close back below their breakout points, then some of the other components that are already weak should lead the market lower. So an example of that would be MTH, M for mother. Already in a downtrend, and it's hanging in there, yeah. So it's come to its a support point. It's held it a few times. If that breaks on a closing basis, you can see that it then go down to the low 20s. That's the next support point. So the other weakest one is LGIH, and in contrast to some of the other home builders that did well on their results, the market didn't like what they did, and you can see that big gap down a few weeks ago. It sort of recovered, and it's just about hanging in there. As again, you can see there's that final support point where it just held it on Friday, but this is the weakest stock of the group. So home builders on the radar, looking to get involved, most definitely.
Okay, good stuff. Moving back to a global markets review. This is always interesting. We love doing a global markets review because it gives us a flavour for where what commodity markets are doing is going to have an influence over what that section of the energy market's doing. We're interested in currencies because currencies can affect stock markets more broadly. Typically when you see currencies declining against the US dollar, then their equities tend to rally. So we love this part of the show, and I've opened up with the Aussie dollar, US dollar. Obviously had a big move off an oversold position on the pivot analysis at the low, and has now come up to what is basically this year's first up annual pivot. At the same time, it is up for more than 7 weeks in a row, so it's overbought. What's interesting though, I mean, right now, we're only a number of days away from the end of the month. So I was just flicking through, how markets have performed this week and indeed this month, because the way we look at markets is that we're interested in where markets close at the end of time, because that is a deciding factor. Price is a secondary consideration. Time is number one. So if I move over to the monthly space, and that's because we've got only half a dozen days left till the end of the month. So the markets that are doing well on a monthly basis, the SPY, so that's the All Ordinaries. Bunds are doing well. The Dow, the dollar index, the S&P 500, the euro doing poorly. What's that? That's 30-year German treasuries, French treasuries. What else is there? Silver, Dow futures. What I'm getting at here is this is the state of play now. What I'm more interested in is, well, where do we close the end of the month? So if I took a snapshot of these markets now, they're at above their monthly upper pivot, and I took a snapshot of the ones who were below it at the end of the month. They're the ones I really want to look at. But right now we've got this sort of bullish story, and it doesn't make sense when you look at it. So that's telling you there's opportunities in front of you. You can't have sort of, bonds and equities. Well, it would be unusual to see them both running at the same time, but not out of the question. On a quarterly basis, it gets even more interesting. We've got Canadian dollar, Aussie dollar, NASDAQ, gold, Japanese yen, natural gas, silver. So these are all the bullish markets. But once again, what we're interested in is, well, which of these markets are seemingly bullish at the moment maintain that bullishness at the end of the quarter. So there's a few here that I'm looking at that look questionable, and but we'll dig into those one by one at the moment. So we'll start with the Aussie dollar. That's this one here, DA6, and it says it's past this. The green means that it's above the upper quarterly pivot, which is that one there. So it looks, it looks pretty bullish at the moment. It came to a very oversold state at the low, and now it's come up to last year's annual pivot, but it's oversold. So right now, it's at that monthly upper pivot. And so for anyone new, okay, this is probably going to be gobbledygook. For any of our clients, please come back into here and watch this video, because this is where you will learn what I'm talking about. But back to the show. So it's no surprise that at the end of the month, we are at this upper monthly pivot. And so for anyone new, orange is annual, blue is semi-annual, brown is quarterly, yellow is weekly. And what we're trying to say to people is, well, you know, if a market, it's like a ladder. There's an upper step to the ladder and there's a lower step. You know, there's the lower step. So the market needs to close above these upper and lower levels to keep going in that time frame. And so the Aussie dollar right now, we're right at the end of the month and we're right up here testing this monthly pink level. If it can't hold it, it's telling you something, right? So at the end of last month, it closed up here and that sent it higher. But now we're coming into an annual level. So Aussie dollar has got a sell signal from Friday. All right, and these little yellow dots here, they're telling you that the Aussie dollar's been up for 7 weeks. That's a long time. That's where you should ask yourself, well, you know, is there a good reason to be selling this? And there's some warnings here. And this is something probably that we're seeing across the board at the moment. We're coming into the end of the month, and there's a lot of markets. If we go to the euro now, a lot of markets are taking on their monthly pivots. And the reason why they're taking on the monthly pivots is because we're at the end of the month. Okay, and it's a little bit bizarre, frankly, how it works. But here's our upper monthly pivot. Here's our lower monthly pivot, and guess what? The market is having a crack at it. We're making a distribution around that lower monthly pivot. So the euro needs to get back under that lower pink pivot to be heading lower, but it's definitely in a bearish setup. Shaun, euro?
It's just about hanging in there. I think the thing about the euro, I tend to avoid trading it, mainly because it always feels to be a very, very crowded trade. The market is perpetually negative the euro, fundamentally, intellectually, and everything. And so for me to trade the euro, the only time I ever get involved in it is when it has one of its really spiky rallies. So you can see there was a couple of times last year where it has very sharp upward moves, and that would be the only time that I'd look to what's called fade that move, and never ever sell it when it's weak. You know, even if it does close below that monthly level, to get involved in it, it's got to get below that black line, which is a big support point. And what I'd like to see is crack that, go down, and then come back and test it. And so that would be where I'd get involved if I was going to. So I want to see it break that black line, and then come back and test it again, and then see if I get involved there. I mean, on the cross rates, the euro doesn't look very good either. So euro pound has sort of broken a head and shoulders pattern.
I'll get to that, but one more thing here. This white line, that's the previous year's close. And just see, we're going to keep talking about yearly closes, but yearly closes are massively powerful. So that was the previous year's close. The market bounced off it, and then it failed at it. This year, it's made a distribution around it. Now we've held it recently. So, you know, if the market, and you can get this annual close from your, you can get the annual close up here in the time area study, right? So if I put the time area on, I'll look to edit it, and I'll turn off everything else, weekly, monthly, quarterly, and I'll just leave the yearly, and then go to the close. You can just overlay the yearly close. So there it is there. All right. Okay, so same thing here. The yearly closes are massively powerful. Once you move under that yearly close on a weekly basis, and then as Shaun mentioned, we've got this really, really, really important level here at 104.6. The euro closes a month under this block here. It's got some serious problems.
Yes, parity. And,
yeah,
and parity and beyond.
yeah, I mean, if you look down, I mean, for the people that have been watching these pivots for a while, you'll notice that the semi-annual pivot is above the annual pivot. So it's not even overextended on the downside. That tells you it can fall a long way at the highest time frame, right? Now, if I show you the opposite side of that story, I go back to the Aussie dollar. you're going to see the opposite picture. So if I go back to Aussie dollar, US dollar spot, and I look at those pivots, look now you see it the other way. The semi-annual pivot was under the annual, and look what's happened, it's flying up. So the euro can fall a long way. Shaun, what's next?
It's probably it on currencies. Gold.
Yeah, okay, gold.
Bonds, not much going on bonds particularly, so not very interesting.
It's always interesting when my screen flicks back to the internet. I know I'm asking CQG to do a lot of work.
Yep.
Okay, so we'll start with gold. Now, for everyone that's been watching the videos, there's nothing new, nothing new here other than the fact that we did close the week above that upper pivot. But the story this week has always been about, well, okay, well, we're at the end of the month now, so this pink upper monthly level is the one that's in play, right? And that's why we've spiked up here. So we need to be above here at the end of the month for this to keep going higher. That's step one. Step two is to overlay support and resistance. You know, we've busted above a major support. It's critical. It's telling you there's a big warning sign here that gold can go a lot higher, but you have the warning in time. The fact that we're up here now is not important. It's where we are at the end of the 31st of, so the end of Feb, so to speak. Okay, so the warning's there. Gold can break higher. But now time is critical. It must close above this, because if it turns down and closes back under this next week, we're still on a sell signal effectively, because if you look at these higher time frame pivots, there's the quarterly up and the quarterly down. Well, at the end of last year, we closed under it, so it's a bearish signal. So gold has to prove itself up here. Yes, it can rally hard, and I'm happy to buy gold if it stays above this level, because you just saw a massive gap there. But I'll tell you what, if it turns around and fails and ends up under this pivot with the sell signal up here, gold can go down a long way. So just be nimble with gold and be patient.
Just a thing there, it's the non-farm payrolls this Friday. So I think the end of the month is Thursday, is it? Wednesday or Thursday? And then payrolls on Friday. So the weekly close for a lot of things is going to be very, very important. The market likes to digest payrolls. So should have some very clear signals next week, shouldn't we?
Yeah, absolutely. Yep. And look, the other thing too is, cyclically speaking, the 27th of Feb is a major cyclical date. So it just adds to the strength of what happens with gold on this close. There's a long-term cycle date that comes into play on the 27th. So if you did happen to see a failure here, you want to take note, because gold looks bullish. So if it turned down now and failed the monthly level, that could upset a lot of people that have been buying. And there's a lot of people think that gold's going up at the moment. And so all I'm trying to say is this month is extra critical for gold. Wait for the close. Do not try and don't try and jump in front of it and get it, second guess it. Just wait till you see where it closes. Let's go to silver. Is similar, except possibly more bullish. When we move to Dow Jones, last week we said the Dow Jones closed over its upper weekly pivot, going higher. That you shouldn't step in front of a freight train that's going higher. Exactly what happened. But there's a little bit more information on the table for this week, which we'll talk about now. Last week what we said was, okay, The market's moving higher, but it is coming into a little bit of resistance. The computer's still thinking here, so bear with me. But last week, what we said was, okay, the market's a bit overextended, but it had to close above the upper annual pivot, which it did. And sorry, market's thinking. Sorry, computer's thinking. So what we said last week was that the Dow Jones was in a potential oversold state, and what it needs to do in that situation is close above the upper weekly pivot, and it did that last Friday. And what we said last week was, well, you know what, we've got this upper target here at 28.50. That's likely to provide some resistance. And what's interesting this week is that, you know, we did gap higher on that higher close last week, but this week we've actually closed under. So there is a little bit of a warning sign here. And it's a bit like gold. If you look back to gold, okay, where we, like 3 weeks ago, this is the same thing happened. We came into resistance. We fell short of that weekly pivot, and then the market pulled back, and it kind of went sideways but higher. They never took out the upper pivot. So it's a little bit same with the Dow. There's a few warning signs now with the Dow. Personally, I wouldn't be trying to take it on long right now. There's a little bit of evidence suggesting to me that it could be a bit tight, and the reason I say that is because we didn't close above this weekly pivot we mentioned last week, whereas last week we did. Shaun?
Yeah, I agree. Looking,
this is a semi-annual time. That's semi-annual, right?
It's just, yeah. I mean, we've come a long way in this quarter already. So, for me, it's difficult to. If you're not already long, it's very difficult to get long. You know, the other thing that's really key here is none of the support and resistance lines have moved to the top. So you can see those blues and the reds, they're all way below. So until they move to the top, or some of them do at least, I'm not really that interested in shorting it.
Yeah, absolutely. Yeah, we're not trying to for a second suggest that you should be selling this, guys. All we're saying is this is a warning. Last week we closed over the yellow line, the upper line. This week we're not, but we are at a semi-annual level. What Shaun's saying is this white daily level, it hasn't moved up above price yet. So now's not the time to be buying, but you certainly shouldn't be selling. So if you're neutral at the moment, you should stay neutral. That would be what I would do for me.
Yep, definitely. Do you want to do the Nasdaq? Because that was.
Yep. So Nasdaq futures on Chart IQ, it's /NQ. Same story where none of the resistances have moved over price, so it is oversold. Sorry, it is overbought in the sense that some of these range pivots are telling you it's extreme, but there's not conclusive evidence until we break under that lower pivot on a weekly close. I won't be selling anything. In fact, the smart thing to do is always buy with the long-term trend, and the long-term trend is up. So, you know, if it does happen to close and break lower, happy days, because the broader uptrend is up. So I'll be waiting to buy it. I'm not actively looking to sell equities. Shaun?
Yep, same here. Yeah, we had that warning sign on Thursday. So it's a little bit of profit taking. Yeah, I really, the supports and resistance lines are, again, they're so far below that until they move to the top, really, yeah, there you go. They're all miles below. So until some of those move to the top, there's no permission to get short. If you're heavily long, then it's sort of saying to you, well, you can start thinking about taking some partial profits and things like that, taking money off the table. Obviously, if you have individual stocks and they're coming up to resistance points, that's another reason to do that.
You can
see Amazon.
The timing is interesting here as well, guys. Okay, so here's the start of the month. That little pink upper bar, that's the start of the month. You know, and on the weekly basis, that's these yellow ones. You can see on a weekly basis, it's almost like, because we closed bullish last quarter above that upper pivot, there's the lower one, the price was over it. The market wanted to go up. And so the market's overshot this upper monthly level in time. So this is where time is critical, right? We've overshot against the month, the week's up here. So now it's like we're at the end of the month now. So we need to come and investigate whether we can hold this monthly period. So time is always critical. Like these pivots that we look at, I cannot tell you the number of times where on the very last day, it will come back and test the end of the month on the 31st. Or at the end of the week, you know, it will come and test this level. So just, you know, bear that in mind when you look at these pivots. Time is critical. So I would not be surprised if we're down here during the week trying to test this upper pivot. If it holds, then it's just going to give it permission to go higher again. Sorry, Shaun, next.
Yeah, I agree, definitely. The payroll is going to, you know, we've got the end of the month and then effectively payroll, which is the first or second of the month. So we're going to have some very clear ideas about where we are this time next week.
Yeah.
Should be nice.
Oil's, you know, let's have a look at it. And yeah, we've done a few videos on oil. I think it's had 11 or 12 cracks at closing over last year's high. Last year's close, which is this white line here. And what we've been at pains to say to people is, well, that's fine. You can tell just how important an annual close is by virtue of the fact that it's had 12 attempts at trying to close over it. But in the end, until it can go over or under on a closing basis, then it's just still sideways again. So we're none the wiser on oil. It's still sideways, but with a long-term bullish bias. What else is there? Gold, silver.
That's probably it, I think.
Yeah, it might be a good opportunity to ask people in the crowd, are there any questions, any markets that people would like answered?
I know my professional clients were very interested in grains. So do bean oil. It's an interesting one. So grains all gave sell signals in the last 10 days or so, different points. Bean oil is the most interesting one because it failed at its final resistance point. It sort of broke down and then came back up to the breakdown point and failed. So if you put the peak lines on there, you'll be able to see that. Yep. So you can see the red line went to the top some time ago, and then we had a sell signal 10 days ago, and it had already broken down. And it's interesting, actually, it's got pretty close to its pink line. So that's the monthly area and also the quarterly as well.
Quarterly. Yeah. And see, this is what I was trying to talk about before, guys. Like right on the end of the month, you know, the grains are trying to be weak, but I tell you what, if they can't get under that lower level at the end of the month, you need to pay attention.
Yeah, if you do soybeans, ZSE. So soybeans was one of the ones that was really interesting in the beginning of the year because it had a very, very tight set of supports and resistances and timelines. It was very, very condensed. And you can see that in January, we went right to the top perfectly with a few ticks above it and failed. And then we come back down, went back up to the monthly level, had a sell signal last week, and now we're drifting lower again.
And on the pivots, look at that, Shaun, like the last day of the month, see how the soybeans got nailed?
Yep.
Could not close above it. So it's like It's a warning sign, guys. You can't take out the upper ladder. Watch out. And did it again.
Oh, yeah. And then it's failed there again. And then you had a sell signal. Don't want to talk too much about the fundamentals, but the crops look good. I mean, it's the South American crop is looking pretty good. And the estimates for the US acreage is all pretty good as well. So beans will be interesting. I think that's probably it. There's not much.
So what about yen? Let's have a look at yen. That was interesting. Because right on the close, it was desperately scrambling to close above the weekly upper pivot, and it failed. I love it when I see this. It tells me so much. You know, it's like for anyone new, forgive us. It is a little complex, and but what I'm talking about is the fact that okay, these are quarterly pivots here, right? Up and down. If the market's going up, it should close above this. But obviously last year the market closed down here, so it's long-term telling you that it doesn't want to go up. However, markets do get oversold, and I won't go into the explanation as to when you look at this why it is oversold, but it was, and it did go up a lot. But now, right now, it has the opposite position of the low, where it was oversold. Now it's overbought. And what I found really interesting was, you know what, we've got a long way to go on a monthly basis for the yen future to be bullish. There's no way it's going to, I mean, it might happen, but I can't see yen gapping all this way and closing above that monthly level and then telling me it's moving higher. I just can't see it, especially when we closed under this quarterly low pivot down here. Okay, so that's a long way, fair enough. We overextended, now we're correcting up. But look what happened this week. We fell short, like on the very day we could not close above it. But what the market's trying to do is get up to this monthly level because we're nearly at the end of the month. And it's just not going to happen. So that just reinforces when you see like a big gap like this at the end of the month and you're at the end of the week, like if it was going to take this upper pivot out, you know what, it would have closed over this yellow line and would then have a crack at it. So the end's not as strong as you think. Looking for sell side opportunities there this week.
Yep.
All right. Well, I guess that's good. Unless anyone's got any questions, there is a question here. Interesting.
It's just Peter saying it'd be nice if there was a color code guide.
Yes. I don't know how we're actually going to do that. So what?
You can in Technician when you look at it, it'll show you the colors when you switch them on.
Yeah. Okay. So
there's really a way within CQG of.
Okay, so the question that's coming from Pete, one of our viewers, is what are the time frames and what are the colors? Well, you know, look, the shorter the length, the shorter the time frame. So yellow is weekly. You can see that the weekly is shorter than the monthly. So weekly is yellow, monthly is pink, and then you have quarterly, which is brown, and then semi-annual, which is this blue one, and then finally you have well, there's not enough data for the yen, but if I pull up, say, Aussie dollar, US dollar, then the annual level is orange. And look, it's definitely not a simple concept that we're trying to pass to people here, but if you bear with us and stay with us, you'll see that there's a lot of power. And the people that do want to get involved, you know, we do have like a dedicated video on our on our community site that delves into exactly what I've been talking about. So look, for anyone that does want to get involved, we do have a free trial coming up. In fact, I'll get the link for you, but essentially we're giving you 30 days full functionality. So that means you'll get access to the Charaki software. You get a one-on-one Skype session. You get email support. You get buy and sell signals. You get to talk to us on this Facebook site. You know, if you've got any questions, you can bug us 24 hours around the clock. You know, we're open to that. But we are looking for another 10 people. That's all we can deal with at any one point in time, because it does take Shaun and I a lot of time to, you know, spend a couple of hours with each person, but that way at least they're getting the right training. And just for anyone that, you know, is new, we do stress that we want a one-on-one Skype session with you. So that means when you sign up with the program, it's imperative that you do sign up to Skype, because we want to talk to you. That way we can teach you and help you with what's involved. And what we've been finding is that a lot of people are taking up the trial, but they're not signing up to Skype. And so it's difficult for us to give you the full experience if you're not able to get onto Skype, so we can actually talk to you and walk you through it blow by blow. So please, anyone new that's watching this, if you want to get involved, part of the process is getting a Skype account and actually talking to us, so that we can give you the, you know, what's effectively the best experience that you can get. So, but there is 10 spots, and that's it for this month. That's all we can do. So here's the link. I'm just going to put it on the in the chat box. It's right there. It's got that link. That will help you to get involved with us. So I guess if there's no other questions right now, it's a critical week, guys, for us. For me, I'm just sitting here watching it. You know, I've been saying it for a bit. You know, we got on the Dow because it was in direction of the trend. It was easy to buy into last week because it's in direction with the trend. The gold's been a different story because it still has a longer term bias down. So that's why we haven't been trying to buy it. And we've been sitting here waiting for it to get to the end of the month. And so, you know, that can take you months. It can take you 2 months before you know, you're in the position of making a well-defined decisions. But you know, that's the power of what we offer, and understanding, having that capability and knowing when to act is very, very powerful. So I hope in time that you'll be able to see that. So Shaun, that's enough of me banging on. Any last words?
No. End of the month, yeah, and payroll Friday. So I think tune in next week. We should have some very clear ideas about what a whole heap of things are going to be doing. So watching and waiting, and then ready to become pretty active. So see everyone next week.
Okay. Bye, everyone.
Okay. Cheers, yeah.